morning, everyone. A very warm welcome to all present here at IILM University, Gurugram. We are truly delighted to have you join us for today's special event, the inauguration of Finance Lab, organized by Fundwiser, the Finance Club.
Indeed, Sneha, today marks a remarkable milestone in IILM's journey, where innovation meets intellect. We are honored to have with us some of the finest minds in the world of finance, experts who have witnessed market highs and truly understand the pulse of our economy. On behalf of IILM University and Fundwiser, we extend a heartfelt welcome to our esteemed dignitaries, respected faculty members, and our vibrant audience who make the university a thriving space to learning and growth.
At IILM, we believe that learning is not the accumulation of facts, but the transformation of understanding. Today's event embodies a spirit where knowledge meets curiosity and dialogue leads to discovery.
Exactly. The flow of today's program will include a panel discussion on the Valuation Mirage, followed by an interactive Q&A session, and finally, the official inauguration of Finance Lab at AI Lab 3. So, let's begin the exciting journey of the insights, innovation, and inspiration.
To mark the auspicious beginning of today's event, we shall commence with the lamp lighting ceremony, which symbolizes purity, wisdom, and the victory of knowledge over ignorance.
We request our esteemed dignitaries and guests to kindly join us for the lamp lighting. To begin with, we are deeply honored to have among us Dr. Sonali Yadav, a professor of practice at IILM University.
It's now my privilege to invite Dr. Sonali Yadav to share her thoughts and officially set the concept note of Finance Lab for today's event. Ma'am, the stage is yours. Please make a round of applause for ma'am.
Thank you so much. A very good morning to all of you. I have been invited here to set the concept note for the Finance Lab. I will be setting the context of the Finance Lab, which IILM University, Gurugram is setting in now. I'll start with what we want to achieve, and then I'll explain exactly what it all imbibes. We want to achieve a replication of a fund house. We are incubating a fund house led by the students, supported by the able faculty members and mentors. And to achieve that responsible activity of entrusting some people with the real money, we are following a progressive path. Under the vision of being motivated by Dr. Ravi Jain, supported so strongly by the team, Professor Aunindyo and Dr. Saima, we think that we are going to achieve it very soon. And how? It's not when we hear about anything related to stock market, and you will see it very soon when we'll be taking you through the panel discussion. One thing is about speculation. Are we creating say, speculators inside? Are we encouraging trading? Is it about tripling your money in a short span of time? The answer is no. It is about trying to explain what is price action basically? Why this candle is what it is today? Because it is a culmination of everything that happens in India, around and globally. It is culminated into a candle. Can any student explain that reasoning, that why is it what it is happening in the markets? So that answer comes after a strong foundational conceptual understanding of basics of finance, to fundamental analysis, to learning the entry and exit points via technical analysis, getting into a field of derivatives for the purpose of hedging or protecting what you have invested. We are trying to restrict or encourage too much of trading and speculation, for which there is an inherent interest in the students. So as I said, it is about being responsible on what you do. So derivatives for the right reason, we want to imbibe and teach and train them around. Creating right kind of strategies, backtesting those strategies, something that worked in the past, can that be a learning for future? Creating some algorithmic based trading systems. The idea is not to jump directly there, but to learn it. As much as you can spend in learning, better would be your initial years of experiences of actually deploying your funds. Now this journey of taking you through that, deploying real fund at a certain stage, you become the mentors for the fresh batch of students who are going to come next year. So that is the concept of Finance Lab here. It is infused and powered by technology. At certain stages, it will be driven by simulations. It will be driven by artificial intelligence when you need to take certain decisions to aid your thinking, not to implement it directly. But yes, these kind of elements are going to be a very important part of Finance Lab. Now, lab is not a physical setup. It's not about these 20 brains who are going to work in a physical system, and lab is not that. It is also about talking about what you learn as students, becoming the agents of spreading it to pan-university, taking some right kind of campaigns and financial literacy awareness to people who really don't understand this. So taking your knowledge outside, speaking rightly and educating people to do the right things what you have learned. So it's a inclusiveness that is a unique or an important element of the Finance Lab. So it's more about going out than being there, and don't imagine yourself that we are converting some of you into the traders who sit in front of the screen all the time, right? So I think I have laid largely the purpose with which this particular idea is coming up. So that is all from my side for explaining this. Thank you so much.
Thank you so much, ma'am, for your inspiring words and for sharing the journey behind this initiative. Your vision continues to motivate us to think critically and pursue financial literacy. Thank you so much, ma'am.
We are honored to welcome Dr. Ravi Kumar Jain, Director, School of Management, IILM University, to deliver the keynote address. Dr. Jain is a distinguished admission through leader and strategist whose work spans innovation, entrepreneurship, and management education. His vision of the experiential learning and strategic thinking. Thank you, sir.
Sir, we have a lot to say about you.
I think, that's fine.
Sure.
Let me just
Please, sir.
save you some time.
Thank you, sir.
Thank you, sir.
Hearing about yourself from your own children is very embarrassing. So today's guest experts who have joined us, spared your time for us, Sanjiv ji. We have two Sanjiv ji, one with E and one with I. Sanjiv Bhasin ji, I've been following you on screen for a really long time, and The way you mix astrology with stock analysis and the market analysis has always been magical, and have guided a lot of people in designing their own investment strategies. And we have our own alumni, market expert from Anandrathi, Saurav. Welcome home, I must say. Thank you for sparing your time on a working day. And Sanjeev ji, you traveled all the way from Mumbai, representing NISM, and IILM has signed up MOU with NISM to integrate a lot of market-related programs, modules in our finance courses. I thought I'll be keeping it short by welcoming for 5 minutes, but then Sonali gave me a task of keynote and all that stuff. So I must start that it is a real pleasure to be here on a day when we have been talking about this finance lab and then creating a platform which bridges, the markets with that of classes, what happens in the academic sessions. For last 4 or 5 months, I've been bugging Aunindyo and then, troubling Saimaji and then Sonali for making it happen. But today I'm so happy that finally the day has come, and what a beginning for this lab, with having 3 experts here coming and witnessing this and being part of the story of unfolding this finance lab as an initiative. In fact, IILM, I would say this is the 4th lab of the 5 that we have envisaged, where we talk about promoting immersive learning. So we have started this lab for experiential learning lab last month, where we try to connect MSMEs with their problem statements, and where our students can dabble into those problem statements and work under the guidance of faculty members to solve the problems, and in the process they learn as they do. Second lab we started was on lab for data analytics, data sciences and business analytics. Again, we inaugurated the lab a couple of weeks ago. That provides a comprehensive toolkit for working on complex data sets and really humongous data sets. The capabilities that we have installed here on campus are really matching to the world-class level in terms of the tools that we offer to our faculty and students to work on complex data sets and draw insights and all that. The third was we call it as personality transformation lab, where we are working on people and their attitude and their behavior, and their conditioning them as to how they can design themselves in terms of their approach to work, approach to problem statements, and approach to life and work. Again, a very, very ambitious and very creative initiative. We have inaugurated that. Again, all happened in the last few weeks. And 4th is this finance lab, and 5th is we are talking about social immersion lab, where we are going to work with NGOs and social impact startups, whereby students can actually dabble into work which matters the most for the society and people. The idea is, it aligns with our vision of nurturing socially conscious business leaders of tomorrow. So social consciousness cannot be taught in the classroom. They have to go to the field. They have to enter into get into the hinterlands of India, and then look at how life is, how business is there. So the social immersion lab is going to work on that. And that is the 5th lab, which we are going to inaugurate very soon. I think even the dates are finalized. Sometime in 3rd week of November, we are going to inaugurate that. So that will complete our all 5 pillars on which IILM will strengthen its immersive learning platforms. I must start by congratulating the team which has put together this this initiative. Dr. Sonali, Dr. Aunindyo, Dr. Saima, and the entire team of finance, BFSI and capital markets team. they say in the world of finance often gets reduced to jargons and formulas, creating space that brings together theory, data, and decision making is truly commendable. We have built this lab. You have built a bridge between classroom and capital markets. Many congratulations to the entire team. Today's topic says Mirage. Very interesting word. I like it. When the story outruns the substance. Valuation has always been a juggle between narrative, that is the story, and the substance. And mirage happens when we get mixed up. In fact, my journey with stock market started as a student in 10th class. My first transaction when I was in 10th standard. Sunshine Factor was my first share that I picked up, sir. Bhasinji, you must be knowing that was a fake company. So Sunshine Pharma gave me 100 rupees profit, and Sunshine Factor took away 1,000 rupees. So when I went to my dad, कि मेरा pocket money सब जो मैंने इकट्ठा किया था सब I lost it. He said, what have you learned? उस टाइम में stock market means gambling, and all sorts of your accounting day, settlement period, cycle and all that. So a lot of things were happening. My second major jolt was, sir, in NCC, Nagarjuna Fertilizers. Then I read a wrong report, obviously a fudged up report, and bought 500 shares without informing my dad. So 35,000 रुपये का फटका लगा, sir. So the thing is, I learned a lesson when my dad didn't say anything to me. He said, champion, go slow. And market, जो दिखता है वो होता नहीं है. And he said, you read the report. I explained to him, I read the report, this accounting statement is this, their financial statements are looking so good. So, this was a big bet, but then, kismat mere saath nahi thi. So, fine, he said, theek hai, dheere dheere chal. And he, us time mein he motivated me saying that, dheere 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 manwa dheere sab kuch hoye, mali siiche 100 ghada, ritu aaye phal hoye. So hold on to yourself, try to learn first before you get into, burning your hands. So I remember that, that was a mirage which was more of a, trading on the information asymmetry, where people who were at the privileged positions where they have all the information, access to information, they would trick the people downstream, at retail investor level. And we go with that euphoria. And today also nothing has changed. The only thing is sophistication, and we are talking about this whole valuation game. Emotionally there is no change, sir. Again, we are not burning hands these days, become wiser in the last 30 years. But the word mirage, took me back to my Sunshine Factor and Sunshine Pharma days. So it captures so much of what I have seen personally in the financial markets for the last 3 decades. Very few years, every few years you have some such, I would say, scam or a situation where the real, tangible and valuable looks very hunky-dory, until we get closer to and realize it was almost heat and hope, not real. So whether it is a dot-com boom in 2000 or crypto mania recently, 2021, a lot of us were swept away in that. And today we are talking about AI euphoria. Anything you touch which has AI in their name is being jacked up big time. The pattern is familiar, what I mean to say. From Sunshine Pharma to AI euphoria today, the pattern is same, and they are trading on the emotion of individuals or investors. The story runs ahead of the substance, and the price runs ahead of value, and that's where the mirage gets created. I don't want to steal the thunder out of the panel discussion we are expecting from all 3 experts today, but 3 aspects I remember, or I thought I'll share on this whole anatomy of Sky-High Valuations that we talk about, whether it is Zomato or latest thing we're talking about is lens cards, valuation. Many have their own speculations and all that. on whether it is real, should it be, should we accept such valuations, should we subscribe to such valuations. Valuations don't inflate out of thin air. They rise on wings of three powerful forces. Narratives that seduce investors, and that's a art of storytelling these days, where the narrative sells. The whole gross merchandise value, is such a big scam it is, or the gross booking value. I was talking to Airbnb, senior folks in my recent visit to San Francisco. So I checked with them as to what is your top line, what is your bottom line, how are you doing and all. He said our gross booking value is around $11 billion. I said, how much money you are making? So he said, no, that doesn't matter. At the end of the day, market buys into the gross, booking value. So again, the idea is they are selling more narrative. So when narratives that seduce investors, every market cycle has its poetry. In 2021, it was fintech will redefine finance, a big statement made. Before that, we all know, they said platforms will own the world, will rule the world and all that. There are compelling stories, but valuation is not poetry, it's prose. It is in data, black and white, and not certainly poetry, which is more tickling your emotion. The second is liquidity. When liquidity blinds the fundamentals, when you have more money supply into the market, obviously we start paying more for something which is of less value. Cheap money doesn't just fuel growth, it fuels optimism also, which is often discovered later that we are riding on the wrong boat. When interest rates fall and capital is abandoned, risk gets mispriced and suddenly everyone is visionary investor, and everybody starts advising on things. The third and most important part, perhaps a lot of market analysts are the culprits, or rating agencies are the culprits, where analysts who fall in love with their stories and who become more of cheerleaders than giving the right insights into the data. The moment analysts stop being skeptics and start becoming cheerleaders, markets lose their anchor. Now that's something which, there are a lot of other thoughts. I'm sure in the panel discussion we are going to hear from the experts. So I want to close my address by saying that as we celebrate the launch of this lab and explore the theme of Valuation Mirage, let's remember a good story can move markets, but only good business sustains them. So dream big, value honestly, keep that beautiful tension between narrative and numbers alive, because that's where true finance lives. My congratulations once again to the Finance Lab team at IILM University School of Management for giving students a space to turn valuation theory into practice. I wish you all many years of exploration, discovery, and yes, occasional humbling encounters with market reality. Thank you so much, and congratulations once again to all.
Thank you so much, sir, for your enlightening words and for emphasizing the role of innovation and critical analysis in business education. Your insights have truly set a powerful foundation for the discussion ahead.
Before we move forward, we have something special lined up. A short video featuring Mr. Aunindyo Chakravarty in conversation with the legendary investor, Mr. Ramesh Damani.
Mr. Ramesh Damani needs absolutely no introduction. He's one of the great legends of the Indian stock markets, a distinguished member of the Bombay Stock Exchange, and he's someone who's taught generations how to find deep value in stocks, how to look at business cycles, how to understand numbers, how to look at cash flows, how to identify trends, how to look at political economy, how to understand global policies, and all of this to remain disciplined and compound your wealth. Ramesh Damani, it is a pleasure and a privilege to have you with us today. I think I'm speaking to you after maybe 10 years or more, and I just want to tell the students that One of the things that I always remember is having an off the record chat with you after the budget of 2007, and you said that you are very worried about the valuations in the market, and you proved to be correct in less than a year. And I don't want to take that up. Is that also the case right now? This is not the place. I want to start off because this is a chat we are having for our finance lab for MBA students. So I want to start out by asking you one thing, that with the hindsight, with the privilege of hindsight, with all the experience you have, if you had to start off today as a young person learning equities or working in a brokerage firm, what would you look at?
Yeah, that's great. Thank you so much, first of all, for having me. I appreciate it's always a privilege to be speaking to students and trying to, show them the path ahead, because I've been a beneficiary of so much goodwill from my seniors. So it's always a pleasure. Thank you so much for inviting me. I often say that you have to live your life forward, but you understand it backwards. And as I look back on my life, I think my generation of Indians that was born just a bit after Midnight's children, so to speak, in the 50s, 60s, something that we were part of what I call the gilded generation in India. Because everything, the tailwinds that happened in our lifetime were so strong. For example, I joined the markets in 87, 88. In 89, what happened? The Berlin Wall fell, which is, for my generation, the most symbolic event that happened in our lifetimes. Because it changed the world as we knew it. What happened in 92? Following the Berlin Wall, India started its economic liberalization program. What happened in 96, 97? India started as a TMT power, as a technological power. So these are enormous tailwinds that we rose for 30 years to success, as I keep reminding the audience when I speak, that when I started in 87, 88, the index was below 800. Today it's closer to 80,000. So in my lifetime, despite so many things that have gone wrong, Cargill, communal riots, communists coming to power, governments changing, global financial crisis, as you mentioned, the index has worked its way from 800 to 80,000. So I feel that I've been a part of the gilded generation. We've been very lucky. We've had very strong tailwinds that have propelled us higher. So what about the future? The thing is that I think on November 6th, which is almost exactly a year ago, the world changed when Donald Trump became elected. For the first time, he's purveying the bad ideas of the 1920s. Tariffs, make America great. These are all issues that have been forgotten, discarded, as we realize that our humanity's aims lay together, that if we all prosper, if one of us prospered, all of us would prosper through free trade, through capitalism, through privatization, through liberalization. So unfortunately, America, being the dominant economic superpower, decided to set a different course from the course that brought itself so much prosperity and the world so much prosperity since 1989, with the introduction of WTO, GATT, liberalization. So I'm afraid that next 30 years, world will be different than what we experienced for the last 30 years. But here's a short thing about if you are a citizen of India investing broadly in Indian stock markets. There are still three powerful trends that will help us. One, of course, is democracy, the fact that India is a democracy, and that we vote for better economic policies. That is always very helpful. The second, of course, is demographics. I think that's the most important correlation you'll find between GDP growth and market growth. And India is the only country in the world with a very young population, and will remain young until 2045, 2050. So the next 30 years or so, we'll have a very young population. While the rest of the world, Japan, Korea, Italy, will start declining in the population. So a huge demographic headwind or tailwind actually coming in our favor. And of course, the other is digitization. That means we can overlook bad infrastructure, though it is getting a lot better in the recent years, but move into digitization. Anyone who's used cash transfers, UPI payments, use DigiYatra, they will realize the power of that digitization is happening. So I think there's nothing to fear. I think the world will change, but it is our job, as Wayne Gretzky famously said, to go where the puck is going rather than where the puck is. I think the puck is still very positive for India, and I think we'll continue to do well over the next 5-10 years.
So let me ask you a thing from the perspective of a student today, an MBA student who is trying to understand equities, and wants to also work in that space, what are the three key things? I'm tying you down to three. You could make it five, you could make it less. What are the three key things that they have to bring about in their life that you have learned over these years? Changes that they need to bring in terms of discipline, learning, everything that you would recommend to them?
Well, a great question, and I always go back to what Warren Buffett says about this because he's kind of figured it out. I think the most important thing, of course, is temperament. You need to, think about markets in a more rational manner. And as he famously put it, when others are fearful, you need to be greedy. When others are greedy, you need to be fearful. So the first is bring the correct temperament to the stock market. If you're someone who's more interested in, say, a fixed return, the markets aren't a place for you. Markets are inherently volatile. So you need to understand and ride the volatility and use it as your friend rather than something to fight against. So I think the first quality is temperament that you bring in there. And then the individual nuances that people bring to the stock market. One of the most important things I learned as a young man, Aunindyo, is the importance when you're young to buy appreciating assets and not depreciating assets. What do I mean by that? You are MBA, you got your first job, you're out of college, you get your first salary of 10 lakhs, 20 lakhs, whatever you're getting per year package. There's a tendency to go and splurge. Buy yourself a more expensive car, take an expensive vacation, buy a wardrobe. But you should save that money, in my opinion. Spend only what is necessary and save that. Because that money saved, compound over 20, 30 years, will make a huge difference in your life. So my first point to most young MBA students getting out is that learn to buy appreciating assets as opposed to depreciating assets. You buy the modern cell phone, it might be good for 6 months, 1 year, but new models coming along and that value of that 2 lakh cell phone is going to 20,000 bucks. Okay? So rather invest in a cheaper cell phone, but give you a chance to expose to equity. So the first thing is buy appreciating assets, not depreciating assets, particularly when you're younger of the mind frame. Secondly, build a circle of competence. There are 6,000 stocks that trade every day on the Bombay Stock Exchange or the National Stock Exchange. You cannot possibly be an expert in all 6,000. You can only be an expert if you get a tip or information. So avoid that. Instead, try and find something you know. For example, you belong to a medical family. You want to find a look at the pharmaceutical stocks because you have a national advantage. Which medicines are working? Which is up for approval? Are we doing anything about dengue vaccine, for example? Who's the best products in the market? Is India a diabetes capital? If India is a diabetes capital, which companies will benefit over the next 5 years? If you're a banker, you can look at banking stocks. If you're a technologist, you can look at software stocks. So try and build a circle of competence, if you will, and try and hunt within that area. I think that's better off than hunting of 5,000 stocks and using tips and information as a basis for your stock picks. So my second thing is you build a circle of competence. And the third and the most important thing, as you mentioned, that I urge everyone to understand, in fact, I don't think schools pay enough attention to it, is learn how compounding works. There's one thing called income and there's one thing called wealth. And wealth is built through compounding. What do I mean by compounding? Is the stock keeps going up 15%, 20%. The longevity of that rise makes you enormously wealthy. So here's the thing that I've often told students. That say you have a 30-year career in the financial markets. In 30 years, if you compound your money at 23, 24%, which essentially means your money doubles every 3 years, you're going to have 1,000x the money you started with. So no matter what amount of money you start with, you're going to end up very rich if you follow this principle. So I would urge your students to learn a lot more compounding. If there's one secret to the stock market, it's one secret to wealth creation, it is understanding compounding. So I would say pay attention to those three things.
So, Mr. Damani, when you started off, obviously value investing was an important thing. There was less information around, so people who could spend a lot of time, take out information, had that advantage. With so much information around, do you think that the markets kind of already price in everything? It's very difficult to find deep value in the market. And if that is the case, how do you go about looking for equity?
No, that's bunkum. I don't believe that even for a bit. I'll tell you why. Because NVIDIA was not known 10 years ago. Yes. Suddenly it's become $5 trillion company. Okay, Microsoft was not known 20 years ago. Google was not known 25 years ago. There's so many great companies in India that have gone up 10x, 20x. A lot of the public sector stocks are known in India. Okay, so you cannot replace information with insights. Insights is what makes money in the stock market. When you have insight which is a different opinion from what the general population has. So insight is very important. And what are the things that drive a great business? Growth, very important. You must find a business that is willing to grow at rates superior than the GDP growth rate. And then, of course, return on capital, free cash flow. Those things will never go out of obsolete in the stock market. If you find businesses with superior cash flow, superior return on equity matrix, they will always get a premium in the market. So this idea that everyone has enough information, that information is no longer important is not true. What is true is insights, and what is true is laser focus on some of the old matrices, free cash flow, return on equity, market cap at which you're buying things, how much you're paying for growth, and those will never go out of fashion in my view.
So one related question that, when one reads someone like Peter Lynch, which many of these younger students would be reading right now, one of the things that Lynch used to do, one thing that you've already pointed out, that build up a circle of competence in things that you would probably have a natural advantage in. Another thing was speaking to management. Is that even possible for young people nowadays? Or is it only, how do you track management in companies?
While they may not really have access to management, if you're a young MBA student, you want to meet management, probably your best bet is to go meet them at AGM. But because of the proliferation of social media, you can go to YouTube and find out the procedures of an AGM or procedures of an analyst meet on almost any major company in India. So you can use that to your advantage. In a small cap company, it is important sometimes to get a fix on management, what they believe, what their body language is. But some of the larger companies, I think that's a bit overrated. I think go to the financial numbers, look at the value proposition. I think that is more important. I don't want to say it's not important. It is important, of course, to meet management. But you have to take a chances. Maybe you can go to an AGM and meet them. Maybe you can go to an analyst meet and meet them. Maybe you can watch a YouTube video of them and meet them.
And listen to the analyst calls, transcripts, or read them, or listen to the recordings, right?
I think that helps, yes.
Okay, one final question. I've already taken up too much of your time. One final question. We're all talking about AI right now. And in the equities and stock markets, a weaker form of AI has been around for a long time, right? The algo traders and, using various kind of things through computers. How is AI changing investing? Is it making it different? Are you using it?
Not really. I mean, in terms of, sometimes you get summaries of analyst meet, which I use. In some ways, it is making it a bit easier out there. But my personal belief is that the value that human insight offers will not be able to be offered by AI. AI will, of course, affect industry. There'll be more productive industries. There'll be new industries. There'll be a lot of change in the businesses we follow. And there'll be models built around AI. But I'm talking as my job as an analyst to figure out the stock market. I mean, if, for example, AI could predict to me which are the 5 stocks that are going to go up today, the stock market would be over as you know it, because everyone will buy those 5 stocks. But that's unlikely to happen, as it's unlikely to be only in passive investing. People say buy the index, that will do well. I think if you want to make money, you need to be an active investor. If you don't have the time and you're involved in your own business, by all means go ahead and be a passive investor, follow the indices, if you will. But I think AI is still such a broad area that we don't quite understand what its impact is. But my feeling is, particularly in the stock market, if you're an analyst in the stock market, it will help you become a better analyst. It'll analyze the quarterly numbers better, summarize a con call for you better. But it will not replace the basic insight, the human intelligence that goes into understanding the soft motivations of a person or the opportunities ahead in a market. I think that will, if that goes away, the stock market as a creature will go away. So I don't believe that's likely to go away.
Okay, I'm going to take the liberty to ask one final question, and that is that young people are, we teach them how to, as you said, cash flows, DCF, all the traditional tools that they learn. How do they, nowadays there are so many companies that are highly valued, very valuable with no earnings at all. And it's very difficult to even track what assets they're building. So what should a young person do in a situation like that? Avoid them completely, or try what tools should they use?
No, I don't think you can make the luxury of avoiding them. I don't think we have the luxury of, the legitimate business, you want to follow it and do that. And I think a lot of the, for example, P ratio, take P ratios, for example, is one of the most common followed metrics in the stock market. A lot of these companies are very high P, so, can we ignore them? But you should look at the turnover of the inventory, turnover of capital, whether it's negative working capital. All of these companies that came out 20 years ago, the Google, the Facebooks of the world, didn't need any capital to grow. They just, recycled their own capital, had huge balance sheets, and could keep growing. So I think it's a mistake to look at, say, P ratio. I think that is the only defining ratio. That a P is 10, it's a good stock, and it's bad. In this new world, you might find P ratios higher because the market is not even maturing to the degree we expect. But the other metrics in terms of growth, free cash flow, are extremely strong. And once you have a digital business, the population can scale up very significantly as opposed to a physical business. So, I think MBA schools that are still focusing perhaps only on, matrices like P ratio, for example, or, a more static analysis as opposed to a more dynamic analysis, perhaps are not serving the students well. So students need to be more holistic, look at many matrices other than just the 1, 2 which are popular in business school.
Thank you so much for giving us time, Mr. Damani. As I said, it's a privilege to have you, and I'm sure it's a great privilege for our students as well. Thank you so much.
It's a privilege for me to come and speak to your class. Thank you for asking me. Thank you.
This was indeed enlightening. We sincerely thank Mr. Ramesh Damani for sharing his wisdom and timeless insights with us through this conversation. His thoughts are truly motivating as well as inspiring. We also want to thank Mr. Aunindyo Chakravarty for conducting this interview and sharing among us. Please make a round of applause for both of them.
And now it's time for the most awaited segment of the day, the panel discussion on the Valuation Mirage. Are Sky-High Valuations sustainable in current markets?
We are joined by esteemed panel of industry leaders who bring with them the years of experience, deep market knowledge, and valuable perspective on today's valuation landscape. We would request all the panelists to join us on the stage.
Please join me in welcoming our panelists. Firstly,
please, sir.
Firstly, we would like to introduce Mr. Sanjiv Bhasin, former director at IIFL Securities, a renowned market analyst, strategist, and trader with over 30 years of experience. He is a familiar face on business channels like ET Now and CNBC TV 18, and known for his sharp market predictions and ability to decode trading psychology. Welcome, sir.
Next, we have Mr. Sanjeev Bajaj, General Manager at National Institute of Securities Market, NISM, with decades of experience in capital market education, regulation, and compliance. He has played a key role in shaping India's investor protection ecosystem. Welcome, sir. Please make a round of applause.
Joining us, Mr. Saurav Prakash, Associate Director at Anand Rathi Shares and Stock Broker Limited, with a strong background in equity research, wealth management, and financial advisory. He offers deep insight into valuation and investor behavior. Welcome, sir.
We would also like to invite Mr. Aunindyo Chakravarty for joining this panel discussion. Please make a round of applause for him as well. We would request Dr. Ravi Kumar Jain, Director, IILM. Oh, okay. Okay. So please, Sunita ma'am, do the felicitation of the guest. Please make a round of applause for the Dean ma'am.
Excuse.
We would request our moderator for today, Dr. Sonali Yadav, to start the panel discussion. Thank you.
Thank you, dear. So the most awaited event for the launch of the Finance Lab. Quite excited to introduce, again, I would say good afternoon to every one of you once again, and a warm welcome to this exciting panel discussion with the Valuation Mirage, our Sky-High Valuations Sustainable in current markets. When it is current, that is where the interest is. So over the last year, Indian stock markets have been on a remarkable journey, as we all know, with the Nifty 50 and Sensex touching record highs, and mid-caps and small-caps outperforming in ways we haven't seen in over a decade. From IPO frenzies and unicorn valuations to AI-led growth stories, there has been no shortage of optimism. But as Warren Buffett says, price is what you pay and value is what you get. So the big question we will decode today is, are these valuations a reflection of India's long-term growth story, or are we walking on the edge of a bubble? So setting the context further, in the last few months, we have seen some extraordinary developments. To quote several mid-cap and small-cap stocks have delivered 100% returns in a year. IPOs are being oversubscribed within hours. Valuation multiples for certain sectors, particularly defense, renewables, and fintech are trading at 2 to 3x their long-term averages. Now, these numbers raise another question in all of our minds to take some insights on this interesting topic. Now, this has led analysts to ask, are we seeing the making of another 2007 style exuberance, or is this time truly different, driven by structural reforms and India's growth narrative? So where is the explanation? So, setting this context and taking that discussion from the macro to touching upon various points, let's hear from each one of you the big questions to start with, and have perspective from each one of you first. What's driving these valuations? So, Mr. Sanjiv Bhasin, to start with.
Good afternoon to all of you, and thank you, Aunindyo and Dr. Sonali, for having me here. It's a pleasure to address students. Well, that's always an imponderable point. You know, there's a big feeling of missed out, and the world is saying how NVIDIA from less than $1 trillion in 4 years is $5 trillion. Our entire market cap is $5 trillion, and there's one company which makes chips which is in $5 trillion. And the world is saying, when will it fall? So the idea of a new wave is always going to be debatable, because valuations reach a board where, you know, the vertigo effect is very, very difficult. It brings you back to the point, are you a value or a growth investor? And that will come only with time. For you people, there are two things which I will say will stand out. One is being aware of the new metrics. Gone are the day when Kodak was taken to click photos. Smartphone came and Kodak became history. Gone are the days when you had to call up a broker and give 2% brokerage and depend on him for prices. You have online and apps which are trading so fast that you cannot you miss a millisecond. And thirdly, adaptability. So you have to adapt with the new times. The new time tell me that Zomato and Swiggy are selling, they are replacing the cost of having personal servants and others, and that is helping you become more choosy with your food, but deliverance is the key. And fourthly, the biggest premium is that we are in a time where change and adaptability are very, very constant. The biggest positive in India is that you are rightly saying there could be the makings of a little bit of froth, because the money which is coming into equity markets has never happened in my lifetime. I've spent 38 years, and now you have 25,000-30,000 SIP, which is constant every month, which means we all have 4 asset classes to divide into in our lifeline, depending on your age. If you are of your age, you should be 100% equity. But if you are above the age of 50, 50% goes into debt as a fixed income. The other 2 asset classes are gold and silver, which is emotional. जो घर में आता है बाहर नहीं जाता. That is why you've seen gold rise, all thanks to the ladies sitting in a line. और यही लक्ष्मी का रूप है. And 4th is real estate. To make one house, it will take you 30 years unless you inherited it. So the easiest way which is missing is a SIP, which is 1,000 rupees. And the new fever of feeling of missed out is saying every IPO must be subscribed because that gives me a first-hand entry. Sonali ma'am, there are always going to be exuberances in the market, and hence in that exuberance you also get good opportunities like an LG Electronics. That is debatable against a Lenskart or a premium of 200 times, but I think there is still miles to go. There will be couple of accidents which we don't know, but the valuation premium which you are giving to some of the new age technologies or digital is in line with the present trend. So go with the flow, that is how you will make money, otherwise you will miss the chances of ever investing in an Nvidia which went from 1 to 5 in the less space of 3 years.
Thank you so much for these wonderful opening remarks. Your Mr. Sanjeev Bajaj, so same context for you also. What's driving these valuations? What's your take on this?
So what's driving these valuations is, first of all, as Sanjiv Bhasin sir said, that it's a flow of money. It's a all-time high liquidity in the markets. I always say that the COVID came as a blessing in disguise. People realize that if they have to build an alternative source of income other than what they earn through their physical labor, they have to move to securities market or share market. And we have seen in the last 4 years or 5 years, there have been 16 crore new demat accounts, right? An all-time existence of stock market led to only 4 crore demat accounts pre-COVID, and today we are sitting at 20 crore demat accounts. Second factor is the FOMO. The youngsters are, more inclined, it's more of an emotional that, am I missing something if I am not investing in securities market? So that is another thing which is bringing in a lot of money. And coupled with huge liquidity. People are shifting their funds from banking system to, not substantially, but partially, to securities market. Recent data shows that there is an all-time high inflow in the mutual funds in terms of SIPs. As sir was suggesting that SIPs are growing. We have seen 29,000 crores of SIP in the month of October only, right? Overall, mutual funds have grown, put together all segments. So this flow of money is leading to valuations. Second thing is, yes, as we were discussing and as Ravi sir also said, that this is all about narrative and storytelling. How you, put that in front of the investors, right? We are seeing that the old age companies which are into manufacturing, real estate and all are not getting those kind of valuation which the new age companies, tech-based companies are getting, because they are creating a altogether different narrative, right? Who will survive, who will not survive is a question of time only. But these valuations are almost pocket-based. You don't find that valuations are very high everywhere. You can take example, I don't want to quote officially, but you can take the example of Tata Motors for that matter. HDFC Bank. If you look at certain pockets, you will find these valuations are not that high. And in certain pockets, the valuations are very, very high. We were listening to Damani Saab and his company at the 92 times the PE, the 92 times the earnings, right? So that is some kind of a, not so rational or reasonable valuations we are seeing. So this is all pocket-based. Unilever is 50 times the PE, right? So these are some pockets where we are seeing very high valuation, yes, and some sectors where we have seen a new wave, like mentioned by sir as a defense, one area where we are seeing a lot of action, because these industries were non-existent a couple of years ago in India. At least we are dependent on outside. But now since the government thrust on those areas, we are seeing a lot of action. So these valuations will be pocket driven by the excess inflow of liquidity. This will continue. This is my
Thank you.
take.
So I completely understand that it's the narratives which are driving the liquidity into the markets, leading to higher valuations. So thank you for your opening remarks on that. And Mr. Saurabh.
Thank you, Sonali ma'am. 10 years, thank you so much for inviting me. Lot of changes has happened in this college. Largely for me, Gurugram becoming Gurugram. So, very basic things I want to touch upon two, 3 points. Firstly, we have to understand this asset class is reversible in nature, right? And for other data points and mathematically, this equity has an average recycle time is 365 days. Right? It's what data suggests that. Secondly, if we have to figure out what's the valuation says that, we have to derive in the mathematical and data driven. How we can do that? First, we have to identify what is the price to earning multiple of our indexes. Right? Top 250 companies is like Nifty large cap, then mid cap, and then small cap. Right? And what's the earning per share for a year, every financial year? Likewise, what data says that this year, Nifty profitability is going to be 8 to 9%. Right? Now, this says that on a earning basis and price to earning multiple of 20, what's 10-year average is, Nifty and all the benchmarks are fairly valued, right? And if we target for next 6 months to 9 months, yes, definitely there is a jump, could be a jump of 10-15%, what the profitability says. That's the point number 1. Point number 2, for students, for learning basis, it's first we have to set about what are my objectives, right? See, for a 14-15% growth, consistently, what Ravi sir also highlighting that compounding is the 8th wonder of the world. Right? If 15% is my objective, if you have 1 lakh rupees, 15% will take you to 2 lakh rupees compounding 5 years, and it will 4 times in next 10 years. That's the impact of compounding, 4 times. Second is for sure 15% you have to choose the equity as an asset class. Then what is my asset class? What Sanjeev sir also highlighted. For a current age, you should be 100% equity. And what not selling my product. Initially, first you have to understand what mutual funds it's like.
That's right, yeah.
What mutual funds are. Also, you should touch upon how derivatives play around your portfolio. You have to build up strategies to get to 15% with highest probability.
Yeah.
Right?
Yeah, right.
You can't create a portfolio with a standard deviation of 20%. Right? In a worst case scenario, that's always in the highlight ki आज बाजार अगर गिर गया 20%, तो मेरे पोर्टफोलियो का क्या होगा?
That's great, Mr. Saurabh, putting on too many of numbers and the analytical aspect which the students will ultimately pick up. Thank you for setting that stage. So, Professor Aunindyo, now your, please conclude this initial, what's driving the valuations?
Sanjeev and I have been friends for a very long time, and we've been together on various shows, and he knows that as a journalist, my job is to basically create scare. But the point is that, I believe that valuations as we knew it in the, let's say, 80s and 90s is very different today because of one simple thing. The rich are richer today than they were earlier, right? Today we have much higher number of billionaires across the world controlling much more money. There is a larger amount of money in the top 0.5% of Indians. Where will they go? What are they going to do? Whether companies continue to have, let's look at a simple number, right? Top line growth in the last 2 years has been lower than GDP growth. But profit growth is twice as much as GDP growth, right? So as long as there's profit, it doesn't matter what's happening in the economy. And profits can come from various sources. Tax cuts, it can come from, as both Mr. Bhasin and Mr. Bajaj have said, it comes from easy money, and it can come from sacking people, as you know is happening all over the place, right? So as long as profit grows, valuation will grow. And even when we say there's a mirage, it's true there is. But many of these very highly valued companies, 4 trillion, 5 trillion now, their price earnings ratio are not that bad at all. They have a very good earnings potential, right? 1 year forward for NVIDIA is 39 or something. That's not bad for a company like NVIDIA, right? So valuation will continue has not, we cannot any longer continue with the old path that we thought, because there is so much money lying around with the rich. They have nowhere to go. They have to put it in gold. They have to put it in equities. They have to put it in real estate. What will they do? Keep it under their pillow? It's not going to happen.
So can I say that it's not altogether a negative thing, having a good valuation? We are giving another perspective.
I mean, frankly, you have to look at, we used to look at profits, right? Earnings, right? That is not going to work any longer. You have to look at, now for a business, the only thing is market cap. And market cap is going up through various reasons. As Sir said, Mr. Bajaj said, liquidity is so high. Interest rates are low. They still cut it further, right? Right now, inflation is high in the US, but they've still cut rates. So the things are moving very differently. So the old way of looking at valuation is not valid anymore. I think Mr. Damani pointed that out, partly because, as Mr. Bajaj pointed out, that is 92 P, that you can't teach P anymore.
So there are high valuations, and then there will always be more valuations expected, because these valuations are a result of excessive money which India is ready to park into the markets. So altogether, we started with a negative pessimism, but now converging to, yes, the valuations are high, and still the Josh is high. All right, so thank you so much for this wonderful opening to setting the tone for further discussions. Again, no matter how we see it, fundamentals versus froth, as you just mentioned in your opening remarks for the students. At what point do you think valuations become disconnected with fundamentals? Largely, we have seen that there is some connection, as said by Professor Aunindyo, that because there is money with people, and that must be speaking a lot about the health of the economy. But is there a point, at what point do valuations become disconnected from the fundamentals?
Yeah, so good point. Now, there will always be a debate whether valuations are justified or not. Secondly, look, India in the last 4 years, as Mr. Bajaj said, we went from 3 crore below COVID to 20 crore demat accounts and 14 crore operational accounts, which means the spate of money which is going into creating equity as an asset class has never been so high, which has also correlated that FIs have been able to sell 4 crore and still the market has gone higher. India is at a premium to China and a lot of the other emerging markets, and rightly so, because of the advent of our local demographic. India has 3 things which stand out: demographic premium, aspiration of middle class. Remember, aspiration is a big word. When you buy a new car, there was a car sold every 2 seconds when the GST cut came around this, just after Navratras. 2 seconds every car. Maruti sold 80,000 cars in 3 days. Now that is sheer money power of aspiration. The car gets depreciated from day one. I'll tell you an incident. When I joined the stock market, I was a first class graduate from SRCC. I'd done half my law, I'd done half my CA, but I got lured into and the stock market was an outcry system. I am a first class graduate, मुझे हिंदी में गिनती भी नहीं आती, and I had to go on the floor. And the market meant you shouted from 12 to 2:30. So मुझे 35 और 45 नहीं पता. आपको पता है कितने आने होते हैं 1 रुपए में? Can anybody tell me? 16 आने. तो एक आना कितने का हुआ? 6 पैसे. तो 6, 16, 96 होते हैं. 4 पैसे कहाँ गए? हर तीसरा आना 7 पैसे का है. सो जो मारवाड़ी लाला था, वो पता था मोटर में ये लाला को गिनती नहीं आती, वो तीसरे आने में 1 पैसा और मार देता था. Meaning you had to learn the nuances of the market. Markets are always there. You have to learn the nuances.
The students don't know what the outcry system is. Just explain to them what it is.
Yeah, so outcry meant you have to shout for a stake. Tata Steel 108 रुपए लिया, 9 बेचा. So you meant that in a 500 people in a floor, you are buying and selling on the back of signals. And imagine that maybe 2,000 crore trading took place all on word of mouth. Now the stock could have gone up and down, but so much was the authenticity of each other that aankhon ki sharam thi, nobody would backtrack. Secondly, so when I joined the stock market, my father said, go and meet Mr. Agarwal. He's a very old seasoned broker. He knows all the class. Now Mr. Agarwal could only speak Punjabi. He could not speak Hindi, English. आप में से किसी को पंजाबी आती है? अच्छा. So I said, uncle, my father said, आपसे पूछने का क्या शेयर लूँ? I'm a new. He said, काका पौंड दा शेयर खरीद ले. 16 साल दी जवान, 78 साल दी बुजुर्ग रोज सवेरे शाम लाएगी. कदी out of fashion नहीं जाएगा. So ponds. So he said 16 साल दी जवान 78, meaning if she's a 16-year-old or a 78, she has to use Pond's cream. The price of Ponds was 50 rupees. Today Ponds got merged with Lever 10 years after that. The price of Ponds, market cap of Lever is almost 3.5 lakh crore when it was available for less than 5,000 crore. Which means ladies are inelastic to price changes on personal consumption. Similar in 91, I bought a stock called Lakme. Mrs. Simone Tata was a very, very amicable lady who could speak brilliantly and look, and she was very attractive looking. And she promoted the brand Lakme. On India, the total market cap issue was 2,500 crore. Luckily, I had some of that got merged. Today, it's a company called Trent. Trent went from 1,000 rupees to 8,000 in the span of 2 years on the back of Westside, Zudio, and the retail outlets becoming the manusprint of your aspiration. So it meant that it meant...
Sorry, Sanjiv, I just want to know, how many of you know about Lakme? Here, raise your hands. Do you know what it stands for, what the meaning of the word Lakme is? It's actually a Frenchified fake version of Lakshmi. Right. Because Simone Tata was French.
So if you held on to those stocks, you can imagine the wealth of market cap you created. It is by default. But remember, brand and aspirations in India's culture drive growth to humongous levels. So Sonali ji, you know, initially when you buy a stock, say a Zomato got listed at 140, went to 40 within 1 year, but Zomato's real uncovering was that the acquisition of Blinkit made it the most attractive buy. Even today, Zomato's earnings are nothing, but the advent is 4 times revenue sales, 4 times volume sales. So the metrics is difficult for you or me to decipher because we know cement, we know steel, we know autos, we know defense, but we don't understand the new age. Right. And that is where the new guys make money. Also, as a caveat, Mr. Warren Buffett is the most astute investor. He's sitting on the maximum cash because he does not understand AI. Yeah. And if you don't understand, you sit on the sideline. But if it's a reality, I think that it is we have to get accustomed to something like AI, which will see the advent of faster rotation and the advent of research becoming even more.
No, right. That's a wonderful way of understanding between the fundamentals versus the froth thing. Now, Mr. Sanjeev Bajaj. So let's just shift a little gear towards sectoral spotlights. So we are talking about valuation, Mirage and everything. So where are the valuations stretched? Are there any pockets like, for example, is it the renewable energy space, the likes of Adani Green Energy, which is trading at around 120x earnings? Or is it about the railway boom that we have recently seen, the IRCON, the likes of RVNL, IRFC, etc., which have hit their all-time highs? So in this next infrastructure, is this something like a next infrastructure super cycle or a classic case of just herd training? So these are just some pockets that I could really, be attracted to. But again, the same question, so sectoral spotlight, where are the valuations stretched?
See,
where should we be wary of in case there are any overstretching?
Working in the market and I'm a very small time trader, I'm not big into it. But what I have understood, the markets behave on a herd mentality kind of a thing, right? Mostly. In India at least, people are not rational while trading at least. So you see all of a sudden certain pockets stretching the valuations, as you mentioned, few stocks. So there is a boom for infrastructure development. In last 14 years, we have seen that there has been a wave of infrastructure development. If you talk about roads, if you talk about airports, you talk about ports, you talk about railway network, everywhere. You talk about defense. So we have seen there has been an unprecedented inflow of money into these sectors. So naturally, there will be a higher valuation in these. We have seen that the valuations have gone down in IT sector because of obvious reasons, right? So there will be, and yes, there are a lot of hype. And you see all of a sudden everybody is investing into green energy, everybody is investing into solar and all that, right? So, and everybody thinks that this is the thing which we have to do. Now, if you look at the past, there are certain pockets where everybody was investing into infrastructure development. These companies have gone into liquidation. They could not, keep their, a classic case is your Delhi-based Jai Prakash Associates, right? They borrowed heavily, 90,000 crore plus, right? What happened? They went bankrupt, could not manage the growth, right? So in certain sectors, you will always see, and there will be shakeouts later on. People will go out of the business, and who loses the money? The retail investor. So don't go by that herd mentality, what I would say. There are pockets where you will find a lot of valuation. There are sectors where, despite the higher valuation, you will see the growth, right? So you have to be very cautious. And you will, even in the sectors, you will find there are some entities which are overvalued, and there are some entities which are reasonably valued, right? But as Bhasin Saab said, you have to look into the growth prospect of that particular company rather than just the sector, right? How they have invested, where is the growth coming from, and that would lead to your success in the industry, what I would say. But yes, there are pockets where are very high valuations, which do not justify those kind of valuations.
Thank you so much, Mr. Bajaj. And your maybe perhaps where are the valuations stretched? Any key takeaways that we can have? So where exactly should we be? Where is the overstretching as per you, Mr. Saurav?
In our thought process, it's very, all sectors are very cyclical in nature, right? It's very difficult to pick any sectors which will perform next year, right? So although we have to bias towards what asset allocation you've been for. I'm sorry, I'm just debating all the topics, but very important, don't be on a sectorial pick, because last 5 years metals not perform. Now last 1 year metals performing like 50 odd%, right? Although Nifty has not given any zero returns. Right. So we can say consumptions is picking up. Consumption says cement, which includes cement, like autos. In last 6 months, you can look at after Detroit 50-60% down, they are picking up now. Metals are now picking up. So these consumption pattern, we can say yes. Defense is something again we can look at as a sector which will have a very good potential to rise. These two things, sectors.
And finally, your any areas where overstretched valuations?
So I think that in today's world, Dr. Sonali, it's there's a lot of information flowing. So if there is any undervalued, if you see low price earnings ratios, that is, you have to adjust it for risk, right? So it's only in low risk areas where you'll find value. But is it value? I don't know, because all the growth is taking place. Sanjiv was talking about Warren Buffett. Warren Buffett is sitting on 50% cash, right? Even more than that now. He sold half his Apple shares. As he said, that he does not understand AI. And, Elon Musk is likely to be the world's first trillionaire. The world's first trillionaire would have been Bill Gates. But he listened to Warren Buffett, who told him, don't put all your money in Microsoft, diversify. But at that time, Microsoft did not have OpenAI investment. OpenAI investment has made it a massive thing. He would have been the trillionaire. So many of these things which we now say, old assumptions, don't hold anymore. Okay, that's the main thing. I would only invest in things which sell to the government. That's the main thing.
All right. So wonderful perspective on this, where the valuations get overstretched. Turning around again to something like an IPO frenzy. Before the company jumps into the markets, investors jump even faster. So we are seeing a fresh wave of IPOs with sky-high valuations again, especially from new age and digital firms. Should retail investors be part of such valuations and growth stories, or wait for some earning clarity? So we can open some kind of an IPO frenzy discussion, perhaps for a few minutes on this. This could be interesting for the audience to know.
Yeah, so Sonali ma'am, there are 3 things to watch which an investor must do. Is the offer for sale from the promoter, or is it the exit of private equity venture capitals? Today in our country, private equity venture capital has become a mainstay. In 2014, there were 1,000 unicorns. Today it is more than 14 lakh, which means youngsters realize that if their ability and perception of an idea can make money, the funding is there. It depends on how you sell your idea. Like you said, narratives and stories are the ones which can get you money. Private equity, venture capitals get lower cost of money at the US and others, and they are willing to put those bets. Venture capital also gets an exit after 5-10 years when a new age or a new digital stock gets listed. And given the circumstance of a wave of liquidity, valuations for the merchant bankers become more attractive, and they become, coiners of the same story. So you have to take cognizant of three things: the peer group comparison, the promoter's intent, and who's making the offer for sale. If it's a private, I don't want to name it, but Lenskart bought his own stock at 3 years back at a valuation of 50 crore and he's offloading at 400. So there is a clear, conflict of interest. Not rightly or wrongly, maybe Lenskart goes higher if he wants to sell 1 billion sunglasses. But like I said, there must be method in the madness. So if you can follow that, and also I don't want to derive you from buying a stock which can open 20% on a pop. Problem is, how do you exit? And how do you enter and how do you stay with a bad apple? That is what you have to question. So question your own DNA, your discipline level, and your greed and fear. In a rising market, there is nobody wanted to sell last year at September at 26,000. The same thing at 21,500 this year. There were no buyers because fear was. Indian markets or stocks are the only asset class which never get bought at a discount. आपको और कहीं सेल मिलती हो कि फ्लिपकार्ट पे सेल है, लेंसकार्ट पे सेल है, you will go and buy. शेयर मार्केट में डिस्काउंट हो आप लोगे नहीं.
You know, taking a cue from what Sanjeev is saying, there used to be, you were too young, Dr. Sonali, at that time, but Sanjeev would remember, in the mid-2000s, petrol prices used to go up very sharply, right? And people would queue up overnight. They would hear petrol price 2 रुपए बढ़ गया है, चलो सब पेट्रोल स्टेशन भरना है. टैंक में 10 लीटर का जगह है, 20 रुपए बचाएंगे, उसके लिए खड़े हैं 2 घंटे. IPO is literally like that. Allocation तो आपका होगा 15,000 का, उस पे वो 20% ऊपर भी जाए तो कुछ भी नहीं बनने वाला है. So it's a bit of that. So IPO is more, I think, a bit of a gamble. In fact, if Dr. Bajaj will be able to correct me, there's a SEBI study on IPOs. I think most big investors, institutional investors, exit within 48 hours of an IPO listing, right? And it's only retail which holds on. Everyone else exits, gets out.
Which SEBI has just mandated that pre-IPO placement mutual funds cannot take place. Yeah. You see, mutual funds are sitting on the largest cash ever in their history. And they are also there to make a buck. So you have to please see the credentials, what time and what price did the private equity guy get in and what is he getting an exit. His exit means you are the last man catching the coin.
Again, sorry to butt in. If you remember, Dr. Sonali, when we were thinking of the lab, we were discussing whether we should get Bloomberg terminals. Yeah. And I'm not going to name the person. He's probably India's biggest VC. And I asked him, what do you recommend? He said, oh, we don't do any of this. But I hear equity people do Bloomberg. So these are the people who are investing without any idea. They don't care about what the numbers are. It's all ultimately a narrative. And they're getting out. That's what it is.
All right. So the explanation doesn't lie in IPO story. No matter what Mr. Bhasin would guide them, this will always be driven by the retail psychology and madness around it, which is going to do this. This game is going to play. So mostly people, that's the reason why we see that kind of an exuberance. Had some people being very cautious and disciplined, which they should be. So this retail frenzy, can that be a reason for this
yes,
IPO boom, whatever we call?
This is the retail frenzy. You look at recent IPOs, what I see where the high net worth individual are investing. You look at the trend in IPOs, right? Retail investor is lacking information, guidance and analysis.
But there is too much information. I think social media, YouTube channels,
that is
influencers.
Not information, I would say, Dr. Sonali. Huh?
Lot of misinformation.
Yeah. A lot of misinformation. If you really want to understand an IPO, don't go by where the institutional investors are investing or where the retail investors are investing. Look for the people, those who are high net worth individual investing, non-institutional investors, right? People, those who invest more than 2 lakh rupees or that particular segment, they also have some, quota available. You look at recent IPOs, you'll find where the retail investor subscription has gone 5 times, 7 times. The high net worth individual subscription is not even not oversubscribed even. That has been 70%, 60% of the total allocation. Because they have the right people, those who are analyzing for them. Right? And they will tell you the exact where this, whether you should invest in this IPO or not, because they are looking for return on their money in short term, whether they want to offload at the listing or not. So my, take is that if you want to really value IPO, look for that particular segment. Because institutional investors have their own compulsions to invest. Right? Retail investor goes by the FOMO. Right? And abhi kuch nahi hai, like, I listen, most of the people, अरे NFMO ले लो because वो 10 रुपए में mutual fund मिल रहा है, right? But is that the right strategy? No, right? So same goes for IPO. Okay.
All right. So thank you so much for putting that perspective for us to understand. Mr. Saurabh, again, any thoughts on this IPO thing and market psychology? And to be very specific, because young generation largely gets influenced by the social media influencers, fin influencers in the wrong way more than the right way now. So how do you see that having an impact on the overall sentiment around it?
So for sure, this equity as a asset class, ये एक दिन में आपको 100% रिटर्न भी दे सकती है, like IPO, which becomes a glamour. Right? कि for a young generation 25 in the middle of the age start investing, कि आज 2 लाख रुपए लगा दिए तो 20% 30% रिटर्न बन सकता है. So lot of people hindsight put across without doing any research, right? Come with that कि यार आज टीना फैक्टर बन गया, there is no alternative, why not, I have a small amount of money, let's put in that allocation. So we don't recommend and we don't suggest to put in money in the IPOs unless you have a horizon of 1 or 2 years. Look at the companies which have a monopolistic or monopoly like a business. Lenskart is one of them. Might be turnaround factor may come because they are into this business. Likewise, we also listed 2 months back. We know kya valuation rakhni. So not a recommendation for IPO from my side.
Okay. Thank you, Mr. Saurabh, for that. So touching upon several points, now outlook ahead. Now what is this? We have spoken about what happened since 2020 or recently, too high valuations and everything. Now outlook ahead is what, if we start today, what lies beyond this mirage now. So as we head into 2026, what's next for Indian valuations? How do you see, where is it going to head?
So 3 things, luckily Donald Trump has woken up on the right side and he said that Indian tariffs will be reduced. I don't know, maybe on the left side when he gets up, he could reverse that. So that's one ball. Secondly, the US shutdown, which is extended for 40 days, is getting over with. Thirdly, Bihar elections and the exit polls show that the stability of NDA remains. And fourthly, India's underperformance in this year has been startling. Even Pakistan is up, the Karachi exchange is up 45%. All thanks to our ladies that gold and silver this year have been the biggest outperformers. Fifthly, the thing is that, Sonali ji, that in 3 years, India was an expensive market at trading at 27, 28, sometimes 30 times. Now we are down to 21, 22 times or maybe 22 times 1 year forward. If you took out the spate of 100 PE stocks, then we would be at 18 times, which makes it more reasonable. My humble request is, never confuse your 2 attitudes which you have, the trader and the investor. Often we get mistaken by our own comprehension who's the trader and who's the investor. The trader never becomes the investor and the investor never becomes the trader. जब आप ट्रेड करते हो, आप भाव से सौदा करते हो. रिलायंस अगर कपड़ा बनाता है या तेल बनाता है, इररिस्पेक्टिव, रिलायंस का भाव खरीदूंगी और बेचूंगी तो प्रॉफिट आएगा. आप क्या करते हो, लॉस में पकड़ लेते हो, लॉस जब आता है आप जस्टिफाई करते हो अर्निंग्स. दैट डजंट वर्क. Investors, like Warren Buffett says, buy the business, which means tantamount to my market cap. What is the market cap of a stock and what is the foreseeable future over the next 3-5 years? Is India's demographic premium giving me 5 trillion as a total market size? I think it's relatively very underpriced. In the last 2 years, 3 years, we just had $200 billion companies, Reliance and TCS. Today the spate has become 6. In the next 5 years, it could become 50. Catch those big players which market cap by size can rise. 11-12% compounded in 4.5 years can double. So we think the index, Nifty Bs, Bank Bs, Silver Bs, Gold Bs, anything to do with an ETF. ETF is an exchange traded fund, which means I'm simply buying the index. If I can be passive and just play the index, then 23 sectors comprising of 65% market cap will give me a better return and less acidity in the night. That if I bought metals and they are down 10%, my portfolio is losing. So the best way is balance your portfolio. Asset allocation, as Saurav said. And thirdly, if you cannot do it yourself, this is the time you need hand-holding. Mutual fund, relationship managers, brokerages do this 365 days, 24/7. Get experts to help you in your portfolio balancing into equity, debt, gold, and real estate, so that you get a mixture of all those. And if you can do the diligence yourself, you can do the footsteps and the, how fast your marquee names are, do the diligence, then it's worth your time. Otherwise, it's better let a professional handle it and make money for you.
So that's a very, very right piece of advice to perhaps those who would now start thinking of entering into the markets.
And
because
everyone can collect his card, Saurav's card.
we have a fund manager with us, and perhaps he can guide us better in what Mr. Bhasin is suggesting. So where do you think, is it the time for this, will this continue, Valuation Mirage continue, or will there be some correction? Because these are some questions where the experts' views really matter.
So Sonali, I say, whenever I take sessions with a student, I say in India we have close to 70 crore doctors and 70 crore financial advisors, right? And I can justify that. You sneeze 3 times and you will get advice from at least 10 people कि काढ़ा पी लो, तुलसी खा लो, अदरक ले लो शहद के साथ, and what not. Similarly, you throw a coin that I have 5 lakh rupees with me, where do I invest? Right? Except for yourself, everybody would advise you. So in India, we have at least, so one half is the doctors and the other half is financial planners.
Sometimes they're the same.
Maybe. So this is what, so if we depend on these 2 people, हिंदी में एक कहावत है नीम हकीम खतराए जान, right? So don't depend on these financial advisors, right? There is no harm in paying money to a seasoned finance advisor, because when it matters to your health, you don't go to an ordinary doctor. If you sneeze continuously for 30 times, next day you go to best of the doctors. Same way, if you are not able to make money, make plan for yourself, go to Saurav. Right, get the advice and make a plan for yourself. Discontinue this habit of doing it by yourself everything, because you cannot be expert in everything, right? So this is one. Yes, this frenzy will continue because of the, as I said, psychological and behavioral aspect of financial markets everywhere globally. Right?
That's right. That's an even more important that where not to go than where to go, right? Yes. And not jump into start investing the moment you get hold of few concepts, and then you can make money, which is where the idea of Finance Lab is also. We are here to draw insights. We are here to do research. We are here to explain what the price action is, not to encourage you to just become the advisors around the university and tell people to jump with little bit of knowledge. So yeah.
Ma'am, just to tell you, firstly, at your age, all of you must aspire for knowledge. See, money making is a part which will come with maturity and time, but knowledge is indispensable. Like Dr. Jain also said, there is a derivative market which has option premiums, option discount. Lot of money people mistake that to be a speculative market. There is risk in every trade which you do. But if you analyze and understand what is theta contraction, then you will understand as the time series ends, the premiums tend to dissipate. And if you can do correctly, so if your knowledge grows, you will be able to advise. You are all of the age where you are not supposed to be fund manager or investor, you're supposed to take the designation of passing on the knowledge which you have to others to help create wealth. Money will come with time, maturity, but seeking knowledge into all instruments, whether speculative or not, is not the key. The key is to have knowledge about why they are speculative. Why does a derivative pricing of an option derive its formula from an implied volatility or a standard? What is the mathematics or the whole methodology of that? Once you are able to garner that, then your professional career will see a lot of takeoffs.
Yes, we have to scare you off more and make you more risk alert before you get risk prone. Thank you so much for this. Anything on any piece of advice perhaps for these students from your side? Because they get excited, I know. We have to really work, because they are, what you are saying about derivatives, this is where the question comes in when we were screening these guys for the finance lab. Will you be taking us through the futures and options and put option and call option? That's where their entire interest is. That's where they want to, quickly get into the game of that speculative space. So what is your piece of advice that which they perhaps should listen to?
There are 2 points, will not take more than 60 seconds. So first is the derivative option. You touched upon that, Sonali madam. Derivatives should be look like an insurance to a portfolio, right? We should not like a trader. So वो पहले बोलते थे ना ये घर को भी जला देगा ऐसा types. So derivative should be look like you buy a car insurance and like कि यार मेरे को कभी गाड़ी ना ठुके और claim ना मिले लेना पड़े. So it's like a portfolio hedge, like FIIs, all the foreign institutions, people, hedge funds look at derivatives, right? First, you should get the knowledge, as Sanjeev sir rightly said, then apply to your wealth, right? Secondly, how we should look at the market way forward. There are 2-3 data points which you should always look at the data, right? One, what Ravi Damani said that एक बहुत correlation है nominal GDP versus Nifty 50. Last 25 years, nominal GDP, which is nominal GDP, is like GDP added with the inflation number. So currently, last 25 years, Nifty returns is like 13.2 and nominal GDP is very close to 12.7, right? So next 3 to 5 years, very likely that we will be performing like to 12-13% on an annualized basis. So that's the way forward we looking at.
Okay, Mr. Saurabh for that, and Professor Aunindyo's advice.
Okay, so my point is I think that Sanjeev, when you joined, did you do brokerage or were you investing?
So I joined as a broker, but the adrenaline rush at that age made me get into speculation.
So I would say become a broker, because advantage of being a broker is market goes down, market goes up, you make money, right? So going forward, essentially you should invest in supplier stocks.
The platform always wins.
Yeah, platform always wins. So for instance, we've talked about so many smart cities. The smart cities haven't come about, but everyone who supplied to those smart cities has become rich. So that's the thing. Look at supplying companies, look at companies which cater to those with money. That is where the future lies. And anyone who's selling to the government, because the government has to buy. There's no future other than that.
That's so wonderfully explained by all the panelists. And I believe we are almost coming to the end of this wonderful discussion where several aspects have been touched upon. But just before we conclude, a final word, a kind of a quick fire round to get an answer from this side or that side, each one of you. So one word answer from all the panelists perhaps. So Nifty 50, overvalued or fairly valued?
Fairly valued, undervalued. I think it's headed for the best 1.5 years next year.
Fairly valued.
Fairly valued?
Fairly valued.
You feel fairly valued? Answer?
On Sanjeev's side, I think it is slightly undervalued compared to the rest of the world.
Okay. Next, mid caps, bubble or opportunity, Mr. Sanjiv Bhasin?
Mid caps will outperform you from here. There's been enough 1.5 years of no returns. I think from here you'll see the. Also, Sonali ji, you know, I must tell you, people talk of private equity and the listed plays like the Zomatos and Lenskart. There is a whole world of new entrepreneurs. By the way, as a disclosure, we are advising the SME market, where the entrepreneur needs 30-50 crore and is allowed to come in the MSME market. The MSME has a 3-year listing, then it comes on the main board. You see, when they start to raise money, they become more transparent and accountable. And I've seen that those people are really aspiring to grow. You know, from 50, 100, 200 crore market cap, some of them have gone to 2,000 crore. And Aunindyo, that is where we think the length and breadth of India stays. Because secondly, I also must give you a point that I think Mr. Sanjeev Bajaj is doing the best job of an NISM, where securities market offers you getting empaneled, getting credited, and learning the those exams. Those exams, if you pass, they may not be very difficult, but it gives you accreditation, it gives you knowledge, and it goes into the whole length and breadth of necessity, which is a necessity now that must become your part and parcel.
Okay, great.
Sorry, I didn't want to divulge from your point.
All right. In one word, mid-caps, bubble or opportunity?
Both.
Both?
Both.
Bubble and opportunity?
Very good opportunity.
Good opportunity in mid-cap?
Mid-cap is only for experts. The world is going towards monopolies. So if you're not an expert, please stay with big cap.
Then where?
Stay with big cap.
Big companies. Oh.
Large cap companies, because only experts who have some information, they know what is a good company. Because there's so much opacity in terms of financials, it's impossible for an outsider to know.
All right. So it's a bubble then. Stay away.
No, not a bubble.
Stay away. Stay away. Yeah.
You cannot decipher exactly unless you have knowledge about what the mid cap is. Yeah. Best is to stay with large cap so that you are present in the market, and they are the ones which will slowly but surely show the way.
Yeah.
True,
Mid-caps
true.
will do well, but how do I know which one will do?
Yeah, right.
That's it.
IPOs, fad or future? One word.
Avoid if you don't understand. There is a whole plethora of other listed stocks which are there where the earnings, the visibility, transparency is easy. Don't get into the feeling of missed out unless you are sure, like an LG Electronics, where the opportunity came because it was, they felt it was being cheapest than even some of the listed consumer plays. So I think opportunity lies in the eyes of the beholder. Don't get in the crowd of missing out. There is enough stories to be missed.
IPOs, fad or future?
Avoid FOMO. There is, as I said, there are, as Bhasin Sahab has also said, there are plethora of stocks available. Invest in them. Don't go by a short-term gain. You may earn 50%. You might have earned in the past, but may not be possible in future.
+1.
+1. Yours?
Almost every IPO which is listed recently has gone down in the next year. So if you want to buy that stock, buy it when it goes down. Why buy it when it's...
Before IPO, post IPO, wait for the...
buy it. It's gone down. 3 months patient. Yeah, go buy it when it's gone down. Look at Zomato. Went down so much. Gone up.
So on this rapid fire, quickly, this retail inflows, are they strength or speculation for the markets, sir?
See, they are strength. This is a trend which is irreversible. You may see little bit up and down, but each household now realizes that the only asset class where 1,000 rupees में आपको picture और popcorn की ticket नहीं मिलती. The only asset class where you can have ownership is equity, and that is available for 1,000 rupees SIP. I think it is irreversible. All of you must have SIPs going, and all your family members also must have, and that is only going to get. We have a 140 crore population. We have 20 crore demat accounts, which means there is a lot of room on the upside.
So retail are strength.
Yes, retail are a strength. Only as recent SEBI study says that only 6% of the 6.5% of the population invested in securities market. So it is still 93% of the market is available. Even if you take the eligible population, which is close to 70 crore people, those who are, what we can classify them as a eligible population to invest in securities market. So there is a whole lot of space. So retail will remain and it's going to increase further.
Yeah, retails will be strength for next 5 years at least.
This is the first time I disagree with the rest of the panel. I think that if you look at what is called retail and look at NSE's data, 25,000 accounts in the retail space, they account for nearly 90% of all investments and trades. So there are basically 25,000 people, right? And this includes some fronts of institutions as well. Household savings is going down. Middle class income is going down. Retail is going to be driven by the richest people, right? So you should stay with where the richest are investing. Don't mess with anything. Yes, I'm not disagreeing with the fact that if you have money, put it in SIP. Part of your money should be in SIP. But what about, because it's still something which is less taxed. So you do get a tax advantage as well. But I'm not that gung-ho about retail, as we call it, because it's just 25,000 people, frankly.
The last one, 2026 market rally, or is it a reality check?
Rally, 100% rally. From here, today is the 11th. We are up 200 points, I don't know now, but we are well on our way to new highs. More than that, the broader market has underperformed, I think that. And please, if you are all technical or analysts, you should see the bank Nifty is leading the space, which is telling us that NPS cycle has bottomed out. PSU banks are coming out with faster than better numbers. NIMs are growing. Credit cycle is just expanding. The first leader in this bull market is the bank index, and the bank Nifty is at all-time highs. So start seeing where you can actually see outperformance. Trader or investor is irrespective. You must know your methodology of making money. Just one call for you all, go and see one PSU stock which has been a laggard for many years and has just hit new highs. On the back that this quarter, after 18 quarters, this company has come out with very good results. It is a disclosure. I have this in my portfolio from much lower levels, and I am advocating it because this could be a doubler in the next 2 years. A company called BHEL. Please go and read the fundamentals, see the numbers, and see the length and breadth. It is the largest power supply maker and distributor. You cannot have EVs expanding till Tata Power and BHEL are part of that. So BHEL numbers are very strong. I'm just giving you knowledge. You can go and do the rest of the check. The stock which has been an underperformer in the last 3 years is today at a new high. I think that it could be a real outperformer in the next 2 years.
Is it a rally?
Yes, rally. We are waiting for that.
Or there is a rally ahead.
By middle of next year, we will be touching 29K.
Again, what Saurav was saying, that generally the Nifty tends to follow, what Mr. Damani also said, tends to follow nominal GDP. And there's been, nominal GDP is up 10%, right? 10.9%, right? But the Nifty has been flat. So it has to catch up. You don't really need a great rise in profitability for it to just catch up. That's all. So therefore, I'm not going to say rally or anything because I frankly don't have the knowledge to do it. But it's just a catch up. So
Nifty will catch up to the economy's valuations. So that's so nicely put by all the panelists here, and I'm sure all different perspectives from things related to psychology, emotions, IPO, where there is a fundamental or fundamentally we are driven, or there is a froth. All these aspects in the recent times, in the past, and what is the way forward. What advices have come wonderfully from the panelists for the students who will now enter into this retail category of fresh influx of retail investors. So it has been a very interesting, all perspectives have been brought by the esteemed panelists here. And this Mirage question, which we started initially, now makes us largely we conclude that yes, there is a rally ahead. This Mirage is there. Be cautious of the wrong pockets, but be faithful on the India's growth story perhaps, where the markets are going to catch up to the India going forward. So yes, we have to be in the right pockets, right places, and with the right approach. Thank you so much all the panelists for taking out so much of your time to make this panel discussion worthy of, this has been a wonderful experience for all of us. Thank you so much.
This was absolutely engaging discussion filled with fresh insights, strong opinion, and invaluable real-world perspectives. A big thank to all our panelists for sharing their time and wisdom. Please make a round of applause for all of them again.
We now move to the interactive Q&A session. If anyone from the audience has a question, please raise your hand. Our volunteers will assist you with the microphone.
Hello, good afternoon everyone. So my question is, are high valuations always a good thing for investors?
See, it depends on the sector you are talking and the growth parameter. Just to tell you, Hindustan Lever and Nestle have always been expensive. 5 years back, Nestle used to trade at 50, 55 times. Today it is again at 60 times, but it is 4 times the price. So what happens is, brands and brand values see exponential growth. Market prices in the best. Never go by the metrics of only your book knowledge on what factors are there. Price to book of PSU banks has never gone above 1, whereas private banks always trade at 2.5, 3, 4 times price to book. So your metrics may hold good on the book value, on your synopsis of knowledge, but the real things are different. So you have to go with the parameter what the market is telling you. And high valuation is not a deterrent to get in. That's why Nvidia went 5 times despite being reasonably valued, but growth was the key over there. So growth and value become the key points, ponderables for you to see.
Thank you so much, sir.
Anyone else, please?
Good afternoon, everyone. My question is, how do interest rates affect company valuations?
Can you repeat?
How do interest rates affect company valuation?
Rate are, we can say, whenever interest rates are down, it's a negative correlation. See, whenever interest rates come down, valuations picked up, right? You have a more purchasing power, right? You can borrow more, invest more. So that's the correlation with the interest rate and the prices. Anything you want to add, sir?
Yeah, with lower interest rate, there would be more liquidity available for the market because investors would shift their money from banking sector to maybe the markets, right? So more liquidity would chase fewer number of stocks, the prices will go up. So for a company perspective, there is more money available to invest at a lower rate. So naturally, the valuations will improve. There was a girl asking at the back.
Sir, can you tell what is the right time to exit the shares? Is it fundamental or technical?
See, with my knowledge, there is no right time to, wrong time to invest, and there is no right time to exit. See, it is all need-based. I have been following this principle for last 20 years. So whenever I have money, I invest. And whenever I have need, I exit. It's only about your financial planning which will help you. So you should be having different buckets, right, for your investment. Long-term plan, long-term bucket should never be exited unless and until you have achieved that goal. Mid-term should be, so whenever you have achieved your goal, you exit that. So do not, in India, the biggest challenge is that people invest only for the sake of investing. We hardly see that the investment objective is there, right? And people put in everything in one bucket. You should be having different buckets for your different financial needs. If you do that, you will never be asking this question. Right? Yes, girl at the back, please.
Please pass the mic to the last girl.
Good afternoon, everyone. My question is, how should I decide between index funds, mutual funds, or the direct stocks as a beginner?
No, there is no choosing. If you are buying an ETF, or a mutual fund, like I said, the best option is that you buy an index-based fund. The Nifty Bs, the bank Bs, the silver Bs, gold Bs are easily available on the exchange itself. If you buy an index fund, see the mutual fund industry has matured. There will be a lot of things, thematic funds, hybrid. You buy as equity as your prerogative, so equity should be the key. And I think for you, the most, as a passive or a long-term investor, index is the best. Index outperforms mostly stocks because they are subject to so many other things which are there. Also, the point when people said, should I book profit and how much to keep? I'll tell you what I started. When I realized, see, my capital is limited, all of you. If you have 1 lakh and you foresee that I'll make 30%, that 30% becomes 40, take your capital off
and leave the profit in the shape of the share. Maybe that share becomes a 10 bagger. But what has happened, you have taken your capital out and you made 40% in the shape of that stock itself. So that stock, if it does well, it is outbeating, because we don't know. Only in retrospect we know whether it's an outperformer or underperformer. And that is what will lead to more wealth getting created.
Thank you, sir.
Hello,
Any other
sir.
question?
Basically, I am having a question. Like म्यूचुअल फंड्स को लेके अभी कुछ टाइम पहले एक हाइप बनी थी कि म्यूचुअल फंड सही नहीं है, तो डू यू थिंक कि नहीं सर, काफ़ी क्रिएटर्स का कहना ये है कि म्यूचुअल फंड इज़ नॉट लाइक अ गुड प्लेस टू इन्वेस्ट बिकॉज फंड मैनेजर्स आर कीपिंग द मनी व्हेन मार्केट इज़ ऑन पीक एंड फंड मैनेजर्स आर इन्वेस्टिंग मनी व्हेन मार्केट इज़ लो. एज व्हाट डू यू थिंक कि ये सही है या एक तरीके से काइंड ऑफ आपको रिटर्न्स बढ़ाने की टेक्निक है?
सबसे सही है, right? And there are always social media hypes created around if something is good going on. So don't listen to that. You do the study of so many funds. You will find that there are funds which have given 27 times, 30 times return in last 15, 16 years or so, right? Or since inception they have given 30, 40% return. So do that study. Right? Entire data is available on MFI website. There are reports available. So don't go by what people are saying on social media. Don't listen to that. That is too much of noise. Okay? So avoid that noise.
Secondly, mutual funds do not sit more than 5-6% on cash, because that's the they don't have. They will put it in liquid fund for some time, but their prerogative is 100% to be in equity. अब ये एक rising tide का होता है कि sometimes you keep cash, that if there is an eventuality I might have written, that depends on. These are small term. If you are looking for the next 20 years, like he said, if 30 times जाना है, तो मैं near के 2 महीने में क्यों social media और influencers की बात पे जाऊँ?
And
even sir,
investing, people look at what is your objective of investing. People see that what has been the return of that mutual fund in last 3 months. My target is 7 years, 10 years. Then why I am interested in 3 months return? The entire data is available for 3 year, 5 year, 10 years since inception, right? So I should be looking that particular thing. If my, as sir said, that if my intention is to park my money for 6 months because I have to pay my next, education installment, then if I look at 5-year data, then I am trying to fool myself. I should be looking at 3 months to 6 months return on that particular fund, maybe a debt fund or maybe a kind of a debt fund. So what is my time horizon? Your investment should be matching with that time horizon of the fund's return, right? And also our regulator is so strong that they do all kind of testing, that even if today some mutual fund has to, liquidate 50% of their total investment, are they able to do that? So that kind of testing is also done from time to time. So don't worry about liquidity in the, mutual funds. That is always there. What you should be doing is planning.
Sir, even there are two investment like options. One is ETF, second one is mutual fund. Which one is more better? As like we know कि ETF जो है वो liquidity basis पे बहुत better option है. Even अगर आपको sell करना है तो आप easily sell कर सकते हो, और even उस पे charges जो है वो बहुत कम लगता है. तो why people are investing in mutual fund instead of ETF?
चॉइस का तो मैं बता नहीं सकता. मैं आपको इसलिए बोल रहा हूँ ETF की एंट्री और एग्जिट चार्जेस कम होते हैं, बट वो आपके लिए इसलिए बता रहे हैं दैट यू आर बाइंग जस्ट द इंडेक्स. दैट इज व्हाट द बेस्ट पार्ट इज. इवन टुडे इफ यू वांट टू इन्वेस्ट इन बुलियन, गोल्ड और सिल्वर, बेटर टू डू थ्रू द ETF. अदरवाइज गोल्ड एंड सिल्वर इज इमोशनल. फिजिकली लिया तो वो फिर बिकता नहीं है, फिर भाव घट गया. सो द बेस्ट, बट देर इज द अदर स्कूल ऑफ थॉट विच सेज आई विल इन्वेस्ट थ्रू द म्यूचुअल फंड. The choices, there are huge, there is a plethora of choices. The diligence and the work has to be done by you. I still advocate the ETFs are a better way because cost of money of entry and exit is lower in that.
So I put it a different, these are different tools. So like in India, we have 1,000+ universities, but you have chosen IILM to study. Right? So same way, there are thousands of instruments available in the market. This is up to you where you want to invest, how much risk-taking capacity you have, what is your time horizon, what plan suits you best. Right? Accordingly, you should be taking a call. Thank you.
Thank you, sir. Any other one wanted to ask?
So, good afternoon, everyone. So, my question is, what risk do investors face if valuation are not sustainable?
Sorry, can you repeat?
So, my question is, what risk do investors face if valuation are not sustainable?
What do investors do if the valuation are not sustainable?
What kind of risk do they face?
अच्छा, no, the risk is always, risk and reward goes hand in hand. अब गोल्ड आज आप 1,30,000 में ले रहे हो, अगर 30,000 आ गया तो रिस्क रिवॉर्ड है ना, बिकॉज द रन फ्रॉम 60 to 130 has been sharp and furious. Similarly, the stock markets, there is no substitute for risk and reward. Please take it with a pinch of salt. Tomorrow, if Donald Trump says 100% on China, the markets will get fooled with the first time. The second time, markets digest that. But risk and reward go hand in hand. There is no guarantee that if you are an investor, there is not risk. That's why. And let me also tell you, equity markets are have a volatility high because they are very liquid. आप 2 दिन में जितना पैसा लगाया निकाल सकते हो. Gold और silver में आपसे या real estate बिकता नहीं है. So the volatility is the animal which causes this. But risk and reward go hand in hand. There is no certainty by anybody who says 11, 12 is a guaranteed. It can be negative returns for many years also. So you have to live with a cycle. If the economy is not doing well, there is something to do with interest rate, there is some geopolitical event. All those are imponderables which are already driven in the price. So don't think that risk reward is not there. That's a part and parcel of any asset class in which you invest.
Thank you all the participants for those engaging questions. You want to ask? Okay.
Sir, earlier we were talking about JP Associates. So right now that Vedanta is acquired and won the bid, what is your opinion about it?
It hasn't still not been decided. There are still bids going on. So there's no conclusion on that. But people have, even if you look at the price at which they are going to acquire, it is a 1/5 of that. Their total debt.
Right. And secondly, today the papers say Adani is going to win the bid. Yes. JP itself has launched a bid with a 5,000 crore upfront. So all the papers will come with the highlights. Aunindyo will blow out the circle to the highest because he is a journalist. He will keep selling the points which are most read by people. Don't go by media, otherwise you will never. People have already made धर्मेंद्र जी को 5 बारी मार दिया और रिकवर भी कर गए. So मैं उसके ऊपर कोई रो नहीं. अपना हार्ड वर्क करो, अपनी डिलीजेंस करो, एनालिटिक्स करो. जब मैं शेयर मार्केट ज्वाइन किया था, इंटरनेट नहीं था. माय फादर यूज्ड टू से रीड 20-50 shares prices every day. मैं sports में ले सकता मैं कौन पढ़ेगा? But today I can tell you 2,000 shares prices every day. You will be dependent on your Google, but I will see it every day. I know what price I have to buy and sell because that's my job. The more analytic you are, the more discerning, because data comes, NSE is universal in data. You can get so much data from sir that you can't believe it. Data is a key if you can handle it well.
Thank you, sir. We are taking it as the last question. Thank you all the participants for the engaging questions and our panelists for their thoughtful and insightful answers.
As a gesture of gratitude, we now present mementos to our distinguished speakers and guests who made this day truly special with our presence and insights.
We would like to call our director, sir, to present mementos to all the guests. Simon, ma'am, please also join. Please make a round of applause for director, sir.
Small token of gratitude. आप लक्ष्मी को पूज रहे हैं, हम सरस्वती आपको प्रदान कर रहे हैं. Good to have you here back home, and we will continue to have you here for many days. Thank you. Thank you.
A heartfelt thank you to all the dignitaries. Let's take a group picture, please.
meeting. Possibly, but no, but also he's had to come back, so he has some meetings. So I've told him to wrap it up. Yeah. Thank you so much for coming.
To conclude this wonderful session, we now invite Dr. Saima Rizvi, Professor, IILM University, to deliver the vote of thanks.
Good afternoon, everyone. It is my pleasure to extend a sincere vote of thanks as we conclude today's inauguration of Finance Lab. It is, in fact, a new beginning for an initiative which was conceptualized by Dr. Sonali, Aunindyo sir, and Ravi sir. Also, I would like to thank Dr. Sunita, Dean of the PG program, for supporting us and guiding us. My sincere gratitude goes to our esteemed panelists, Mr. Sanjeev Bajaj, Mr. Sanjiv Bhasin, even Mr. Ramesh Zamani, who took out time and spoke to us, to our students, Mr. Saurav Prakash, and Professor Aunindyo Chakravarty, for sharing their valuable insights on the topic, the Valuation Mirage, our Sky-High Valuations Sustainable in the current market. A special thanks to Dr. Sonali for moderating the session with such clarity and poise. Special thanks to the Fundwiser team for putting up a good show, and students for enthusiastic participation. Thank you, and have a wonderful day ahead.
Thank you to all the students who have done a great job.
Thank you so much, ma'am, for your kind words and acknowledgement to all the efforts who made this event a success. Your encouragement truly motivates us to keep striving for excellence. We now
move forward one of the most awaited moments of the day, the official inauguration of the Finance Lab at AI Lab 3.
This lab represents a major leap in experiential learning where theory meets practice and students can engage with real-time data, simulations and analytics to better understand the financial world. We request all the dignitaries to please join. All the students must be seated for here. We request all the Fundwiser team to come on the stage for a group picture with all the teachers and dignitaries. All the Fundwiser team, please join us on the stage for the group picture.
They've all arranged and they've been working till late at night. Come. No. Come in. Short girls. So they are more inclined towards finance. We saw more girls and lesser boys now.
You all should be visible.
They have been doing a lot of hard work along with Dr. Sonali and Dr. Saima till late at night, early morning.